Welcome to this video, which is our weekly Forex forecast. It is the 3rd of April. It's Monday, 7:30 p.m. GMT. Now, as per usual, this is just a general overview of the markets. If you want our Forex course, our full trading techniques, and our daily technical analysis of major Forex pairs, simply click on the link beneath this video. Now, in terms of this week's forecast, see plenty of opportunities in the week ahead. Now, what I'm going to do today is I'm just going to do the forecast slightly differently. I know a lot of members watch this video, obviously, but a lot of non-members do as well. A lot of people have been asking me, can we just take a look at your daily technical analysis? So today, what I'm going to do is go through our positions in the Member Centre on 9 pairs as I talk about the fundamentals and just basically relate that to the chart. Now, another question I'm frequently asked is, what is the best chart pattern? Well, I only actually ever use one, which is a triangle. It's either ascending or descending. And I'm also going to speak about why triangles are a great formation to use. They're simple, but they're very, very effective. I'll also be covering a lot of other pairs after we've gone through the 9 pairs in the Member Centre. But now I'm going to do my PM update, just see where we are with the market action. So we'll just go and look at the 9 pairs. The Member Centre, and going to do my PM update. So in terms of updates, do the daily market update for 10:30 a.m, which is majors, all the news and sentiment, and then the crosses just after for 11 a.m. 7:30 p.m. now, so nearly the end of my day. Now, here's the daily market update. Before we look at the charts, always use the CFTC net traders as backup, so pay attention to that report because it tells us what the smart money is doing. Also, the weekly charts as well really helps you separate the woods from the trees and give you the big levels that matter. So those 2 sections will always come into play. Also like to review the sentiment, any news that might impact on the technical picture. And in terms of my charts, they're always very simple. They normally got 3 or 4 lines on them at most. As you can see, it's a triangle. I'll pay attention to momentum and volatility. Sometimes they're very important, sometimes they're not so important. So it's a bit of a mixture. Our techniques are fully explained in our course. Now, in terms of the levels that we do, I like to be very specific, just to show that I can trade my own techniques, really. So I always give my specific entry, stop and target. I always do it in advance, and I just don't do market orders. Now, in terms of this pair, we're in at 108.70, and just want to show why. Okay, over here we get a gap higher, move up to 109, just ease back. Now, that gap higher and big move up was caused by a rumour that the ECB might raise interest rates or cut their stimulus back. It's in the price, and we just felt, there's no way the ECB will be cutting stimulus anytime soon. Said that for months, so we want to sell it. It's come off a round number. Just want a little bit of weakness to get in. Also, from a technical perspective, I'd pay attention to this candle here. Nearly got to 109, then dramatically faded. So just a little bit of weakness will come in. She tumbles nicely. She's now through the 20-day. Poke up to test it. This morning, we're settling near the body low here. Do we need to make any changes tonight? Yes, we do, actually, in my view. See this blue candle, new low, come back up. These are very low volatility. So what are we going to do? Sorry, I just want to check the last price, which is 106.70. We want to basically bank 50% of our profit. Why? Well, we're 200 pips up, so we want to lighten our exposure. We still think we could be going down, so we want to leave a trade running. And we got the option of putting the bank trade back in on a rally. We can see what happens tomorrow morning on a break low, which I can update in the daily report. If we spiked overnight, our stop is 107.50, so we can still come out with 120 pips on the trade that's running, but I don't think that's very likely, actually. Put the target down here as 104, although there is support at 10, just above 106. I'll draw that in when we get closer to the level, but I'm looking for a big decline. Fundamentals out and out bearish for us. ECB They're not raising interest rates or cutting stimulus. Latest inflation figures have reinforced that. Greek debt negotiations, they're not going well. That's going to weigh on the euro. Populist vote in France, the elections coming up, going to weigh on the euro. On the other side, the USD, in our view, is oversold on a number of pairs. Interest rate perceptions by the market are too low. We think they're going to change that view, and that's going to help the USD. I'll be discussing the USD a little bit more detail later on. So far so good with this trade. Just hoping it will turn into a nice downtrend. Now let's go and look at the next pair, which is going to be, GBP USD. Done well in this one over the last few weeks. We caught all of that rally up. When she dipped back here, you can see it at 124. I got in at 124.30, messed the trade up, had my stop to entry too quickly, got stopped out. Of course, the price runs on, always does when that happens. And I've elected to come back in above 125.30, and just near that level this morning at the low. So do I need to do anything with that tonight? We shall see. Let's just bring up the British pound. Well, she's come down, and she's 124.65 low, but settling back near the round number at 124.82. I am going to leave this one in. I've got a fairly tight stop on this at 124.30, so it's not too much risk. I think, from a personal perspective, I've said this for a while, I think the hard Brexit is in the price. I think, we've got a record net speculative short position, and I think that's going to get run on stop. So first target 127. Now, in terms of just the caution with this one, why I'm using a tight stop, is that I also think the USD, as I said, is a little bit oversold generally. So tight stop, but I'm very bullish of the British pound, as everyone knows. So we'll see if this one moves to the upside. AUD USD, I covered it in a video at the weekend. We'll come in short through 76.72. And when I did the video on Sunday, you see it here, just above the 20-day moving average. We've now taken that out, just sitting at 76 this morning. And I don't think we're too much different tonight, actually, but let's have a quick look. Now, we're still sitting exactly the same level as we were this morning. We're holding our full position. Very bearish of the Aussie. Heavy commercial selling, as I was saying at the weekend. Also, the fundamentals are turning bearish for the Aussie. Iron ore prices are falling. That's Australia's biggest export. China is slowing up. If there is a move from risk, it's the Aussie dollar that's going to get hit hard. We expect a move from risk, which will send the Aussie to the downside. So it's a patience game, really. First level of support is 75. Then I put 73. If we look at the weekly chart, we can have 70. So at the minute, just sitting at 76. It's a minor profit. Nothing going on, really. A bit frustrating. Really hoping this one turns to the downside. So we shall see. Now, let's move to the next chart, which is USD JPY. This has been a really good performer from us in at 114.70. I did a video at the time when we did this. It's on this red candle here that poked above 115 and came straight back through the level. And at the time there was heavy commercial selling, smart money selling up at 115, and also heavy spec buying. Also, it was near Japanese year end, where Japanese exporters are going to basically sell the USD above 115. So we thought that would come off, turned into a really nice downtrend. Got down as far as 110, bounced back a bit. Now we're at 111. Now what we did, you can see it here on the left, we took some profit into 111.20, placed it back in at 112 to get ourselves an extra 80 pips. And we've banked out or done that 50-50 a couple of times on the way down. So we're near enough 200 pips in bank profit on 50% of our trades, so that's good. Do we need to do anything with this one tonight? Let's have a quick look. That the USD's looking pretty weak around the 111 level, so I think we will hold. I'll see if we break that 111 level in the morning. See if we or if we don't break it, see if we might bank 50% of our profit this year. We're 370 pips up on the open position at the moment. I've got the stop at 113.30. I'm going to bring that down probably behind the 112 level now. I think I don't see much upside in the USD. For me, move to risk off is just so bullish for the yen. Also, obviously I'm expecting that to come. Also, I think the Bank of Japan going to cut their monetary stimulus. So, I've got high hopes for this trade. 110 is the level I put on the daily, but on the weekly, I've got target a 106. So this one's running really nicely at the moment, so we'll see what happens. Last one on the majors is the Canadian dollar, in at 133.30, about where we were this morning. I've had pokes through 133. You see these tails. Don't see us closing below that level, but I put my stop back at 132.30, well clear of the tails. What I'm looking for is this level here to get run. Once we get above 134, I can move my stop up to entry. This one's had a little bit of movement today, and it was near the level I wanted to break. Let's see where it is right now. Right, she's right at the 20, at nearly at 130. Well, she touched 134. Strong candle. I'm hoping she'll follow through to get above 134.30, and then I can move my stop up. From the perspective of our target, 135.50. That's the first target. Second target on the weekly chart is 140. I can't see good news coming for the CAD. I think the oil price is going down. Record net speculative long position. If crude breaks, then that's going to impact on the CAD. There's been talk in the news wires that Bank of Canada might be close to raising interest rates. Well, that hasn't helped the CAD really, and they're nowhere near raising interest rates. So my own view is we are going higher in USD CAD. Now let's just go and have a look at the cross rates. The crosses now, and actually a lot of people like to trade the majors. We actually find the crosses actually give us some really good profit opportunities. At the moment they are actually, and first one we're going to look at is Euro JPY, short at 122.30. I'll just show why we did this trade, which was these candles up here. We're on that ECB rumour. 123 looks good resistance to us. Don't quite get up there. Settle, back here, So we'll just wait for a little bit more confirmation. We'll come through the low, come through it, and we tumble down nicely towards the 118 level. So, a really decent profit. And you can see what I've said this morning. We will bank 50% of our profit at 118.70. So basically, it's 360 pips. So we may as well take that in our view. Still leave our trade run. Still think there's more downside. Place it back in at 119.70 or below 117.80, which is, I want to clear the round number. I think we're going down to 116. Obviously, I'm heavily bullish the yen, and this trade is going well so far. And when I put 116 on this chart, on the daily chart, I can look at 110 on the on the weekly chart as a target. So a lot of downside. Let's see what we're doing tonight. You can see actually we've come down a little bit lower. Doesn't matter to us. We'll get an opportunity to get back in, and we've lightened our position. So the yen for us, it's just so bullish, as I've said. Moving on to Euro GBP, short from 86.40. I'll put the stop at entry on this one now. Target 84. Actually, I've written that wrong because it's actually 83.50. So apologies to everyone. We banked 50% of our profit into 85.60. 80 pips, not much, but I just want to get something out. I think we're a little bit oversold in the short term. Place it back in if we get up to the 86 level, which I think is good resistance here. That candle tail here, this one here. So looking, very, very bearish of the euro, and I'm bullish of the pound. And I just think, yeah, everyone talks about Brexit impact on the GBP. It's going to be hard on Eurozone. In fact, I think, people just aren't thinking about it. You're losing the second biggest economy and also the second biggest contributor to the budget. And I think I said it last week. Who's going to make up the shortfall? I'll be interested to see all the squabbling. Right, let's move to the next one, which is, actually, do we need to make any changes to Euro GBP tonight? I don't think we do. Let's have a look. Okay, here's the Euro GBP. You see she's come up a bit near the high, so we were probably wise to take 50% of our profit in. Now, Euro CAD. This is one where we actually caught the fall, and now basically I want to go for a move up. I think the euro's oversold in the short term, and I'm doing a very aggressive entry this morning, just above the high of this candle as well, low of this candle. So let's see what we're doing with Euro CAD this evening. See, that's decent move up for us. It's come through the level quite nicely. So hopefully we'll get some follow through tomorrow and we can move our stop up. So a little bit of profit on this one so far. I think she'll run up towards this 144 level. I just feel commodity currencies are going to be weak against the other majors. So the euro, GBP, and obviously the safe haven USD and JPY. So this one's moving all right. We'll see if that continues the upside. Last one, AUD CAD. 107.70 we're in. We've got quite a tight stop here at 102.50. Target the par level. Basically sitting below our entry level. Not by much this morning. Let's have a look at AUD CAD this evening. I've got the feeling this one is not going to be a good one for us. Let's have a look. Oh, it's not as bad as I thought, actually. It's come up towards the 102, touching the 20-day move-in average. We've got a tight stop on this one anyway, so I'm basically going to hold it. So that's the review of the cross-rate section. Now let's talk about some other pairs. Okay, back off that review there of 9 currency pairs there. In terms of the positions there, they're looking really good for us at the moment. Nearly 1,000 pips in profit on those open positions. What I would say though is over the last few weeks, I think it's been very user friendly for Forex traders. We've had some decent trends follow through. We've had a little bit of an uptick in volatility in many pairs. So it's been a good period. Obviously we get our periods of drawdown, flat periods, but it's a question of making hay while the sun shines, as the old saying goes. Hoping the volatility continues. Now, in terms of, before we talk about some more pairs and levels, just want to make a few points. In terms of when you're doing Forex analysis, you can see, kept it very simple there. That analysis does not take long. My morning report probably takes maybe an hour, and I study the news in that period as well. The evening update probably takes me 20 minutes. Don't look at the screen in the day. Everything is done through levels in advance. That keeps the emotions out. And also, in terms of the charts, keep them nice and clean. Now, in terms of all those pairs there, the only formation you see as a chart pattern is a triangle. Now, I don't actually consciously draw a triangle. That's just the way they turn out. And I think the way why they turn out that way is I like straight lines, obviously, because they equate to one price. I like them through round numbers. Diagonal lines in longer time frames tend to give you the direction of the trend, but they're not as valid as straight lines, okay? Because obviously it equates to two different prices, which are far apart. But they give you a good idea of the trend, and you'll notice if I've got a long diagonal line, I'll normally cross it with a straight as well, or cross with a moving average. I think diagonal lines in short periods can give you that build up of a momentum or a price, or if momentum is easing. So just they just come out naturally as triangles for me. And yeah, they're very much trading the reality of price as it is now. Yeah, we're not really trying to predict anything at all. It's just probability. When the level breaks, that's it. You get in, you've got a target, and away you go, so to speak. Descending and ascending triangles. I've read this in these technical analysis books, that a descending triangle, the odds always favour, or the odds are more of a break to the downside. And if it's an ascending triangle, the odds favour a break to the upside. That's complete nonsense. They could go either way. I've done numerous tests on this. So a triangle is a triangle. Don't go with the ascending is more bullish than a descending. It's just simply not true. What else was I going to add? I think just keep it nice and simple. I think traders overcomplicate their charts. The more thought they put into the chart, the better the result is going to be. It should be very quick, should be very simple as well. Once you get used to a simple system, it just becomes very natural the way you draw the chart. It should be effortless, okay? You should come in with the attitude, trading probability, if trade goes wrong, that's fine. Your reg is going to work over the longer term. So that's the way I like to do my charting. It might not be for everyone, but it kind of suits me. Right, other pairs and levels. If I think USD, I did actually do a Forex forecast last week, but my view, the reason I didn't do one was because my view hadn't really changed. And basically was, for example, USD bullish. Saying I like the look of it on the other European currencies, which were the Swiss franc, Swedish krona. It's moved up quite nicely through 20-day moving average now. I think going to recent highs. Also bullish of USD MXN. I did a video on that just about over a week ago, and basically I think it's going to have a massive move to the upside. You can go and look at the video. USD Turkish lira, long of this one, it's just been hanging around over the last week and a half. I think that is going to break to the upside. I'm basically bullish of the USD on most major currencies. Like the look of it also on the Singapore dollar at the moment as a long position. I'll talk about the dollar in general terms in a little bit, but let's go to the GBP. Obviously, heavily bullish of the British pound. Now, obviously, I said I was a little bit cautious on GBP USD. I've got a fairly tight stop. My favourite pair against the GBP is the AUD. And I did a video on this at the weekend, which you can check out. Taken 400 pips out of this one. I think we're going to get a lot more. I see any dip in the pound as a buying opportunity. In terms, pound very oversold generally. Aussie overbought. Move from risk potentially coming. Pound is going to fare better. Smart money commercials heavily long the pound, short the Aussie. I also like the look of the GBP on the Kiwi and the CAD as well. But I think the Aussie would be my favourite. What else we got? I forgot to say my favourite minor pair, USD CNH offshore spot Chinese one. Come back in long on that one. Going to recent highs. I think the Chinese will devalue that at some point. I know they say this every week. They will. At some point this year they'll devalue it. The dollar will skyrocket. So it's worth a small position. In terms of other pairs, I'm trying to think. JPY, sorry. Any currency major is going down longer term on the JPY in our view. And basically we favour selling the commodity currencies. We've had a good rundown over the last few weeks. There's plenty more downside potential. Actually did a video on AUD JPY yesterday, which you can check out. And the AUD is actually breaking down nicely for us today, so we shall see. Also the emerging market currencies short on the JPY. Do think in terms of the USD, it's basically, it got oversold on a lot of majors. Just basically because the market only sees 2 interest rate hikes this year. At the moment, inflation points to 3 or more, and that's without Trump's policies coming, and he's going to stimulate the economy. He's not going to get everything done that he wants, and we see that with the healthcare bill. But he's certainly going to help build inflation as well. So I think the market will change its perception on US rates, and that will keep the dollar firm. Also, if there's a move from risk, then the USD will basically firm up behind the JPY. And yeah, in terms of the stock market, when it reached those all-time highs, it gapped higher. That was the bullish climax for stocks. Yeah, the completely bullish scenario for what Trump would achieve priced in. Mentioned this in the video yesterday as well. We've come off, seeing a little bit of a rally. I don't see new highs coming. I think we'll see a decent corrective break to the downside. In terms of, if you look at the media, they're always pretty bullish about the global economy and stocks, or they have been recently. And I was looking today at data out of China, the PMIs, and they're saying, coming better than expected. China is doing well. It's all the the media just seems to think, or the mainstream media doesn't seem to think China has the problems it has. PMIs are only good because it's construction. Where does the construction come from? The state. It's just created work for the sake of creating work. China has got so many houses and office blocks free, that are not full. Do you need to build any more? Any more highways between ghost cities? Of course you don't. That's a way of keeping up, economic growth, keeping the numbers up. But what does it do? It increases debt all the time. That is basically a bubble that will burst. Might not be tomorrow, but it's coming. But the one thing I would say is that, the days have gone where China can power global economic growth. Plenty of other problems around the world as well, particularly in the Eurozone, as I mentioned, and there's always the potential for a black swan that no one expects to come in and burst global equity markets. And they are so vulnerable. They are at bubble levels. And the ones that could go down first, in my view, are the emerging markets. They rely on capital inflows in US dollars. They're getting more expensive. There's hundreds of trillions of dollars of loans which need to be repaid. They're going to get more expensive with interest rate hikes and the USD firming. I've been saying, for the last few weeks, I felt, the market, over the last few months, the markets have been a little bit frustrating. The volatility has been low, a lot of whipsaw moves and so forth. But, over the last month or so, we are starting to see some increase in some pairs in volatility, some better trends. Could always be better. I think it is going to get better. Because I think, once we start getting a more risk-off environment, volatility will really pick up. That's good for us as Forex traders. It gives us, better profit potential. So we shall see. Sorry I missed the forecast last week. Just really couldn't think of anything to say. It was kind of the same view. I will be back at the weekend as per usual. And if you ever got any questions or queries on any pairs or any aspects of currency trading, please feel free to email me. Take care. Have a good evening.